Well, a bad start to the week. The key benchmarks today slumping in trade as investors turned cautious ahead of the RBI policy meet on December 8th. The uncertainty around Omicron virus rising in India also added to the panic. The Nifty slipped below 17,000 levels, closing at 16,912. That's down 284 points. The Sensex down 949 points, closing at 56,747. We saw weakness across the board. 49 of the 50 Nifty stocks closed in the red. IT, FMCG, auto, financials leading to broad-based selling. IndusInd Bank down 3.7%. Tata Consumer down 3.3%. Bajaj Finserv down 3.2%. Airtel and also TCS, some of the top laggards of the day. The only gainer was UPL. Broader markets also inching lower, with the S&P BSE mid-cap and small-cap index ending the day down 1.35% each. Meanwhile, the India VIX was up 9% at 20.08, giving you a sense of the kind of volatility that's currently gripping the market. Our global business editor, Udayan Mukherjee, joining us now. Udayan, markets once again nosediving today. Clearly, some of those virus concerns are taking over front and center, with Omicron fears looming large. Is that really going to be the most crucial factor to keep an eye on going forward for the week?
I imagine, Abha, because while the virus is very much in the system and it cannot be called a complete unknown factor. I think this Omicron variant has come as a little bit of a surprise for the market, because I don't think the market was pricing in any kind of a third wave. We may not have a third wave yet, but I think it has come as a little bit of an element of surprise, and therefore it has hastened an overdue process of correction out here in the market, globally and locally. But now, even technically, if you see how things have moved out, we had a big one leg of the fall, down from 18,500, almost straightway down to below 17,000. And we had a 2-3 day kind of a pullback. So we had a pullback to about 17,300 kind of levels. And then we have resumed the fall once again and gone back to below 17,000. I think the nature of the price action also seems to suggest that the market may not be done with that corrective wave quite yet. Of course, as you said, it depends on the news flow which is to come on Omicron and how cases build up globally and locally. But I don't think it is very important for investors or very useful for investors who are watching you today to talk about what the future of Omicron could be, because that is something which is absolutely impossible to predict. What investors can do is to say the market has corrected about 1,500–1,600 points on the Nifty. Do I buy here, or do I wait for the correction to deepen and buy then? I think the answer to that, I would suggest, should be that you've had one leg of the correction, 8–9% down. And it may be conceivable that the market loses another even 7–8% more. It's not inconceivable. So, do you know it will happen? No. Can the market turn around and rally again tomorrow? It could well do that. So, maybe the better point for investors, or the better strategy for investors, would be to buy one lot now. For people who want to put more money to work in the market, is to buy somewhere around this level of below 17,000. And if the market were to fall more, maybe say get close to 16,000 levels, then you buy some more and you get a reasonable average entry price using this correction. None of us know the bottom. So I think pondering about Omicron and where the bottom might be may not be very useful. I think it's prudent to keep averaging starting now all the way down if the correction deepens, and then wait for the rebound to actually reap the rewards.